Welcome to our forum. So, there's a bit of a strange setup regarding the mic. And so during question and answers, Tony's got to rattle it around and give each person a question that will not be so there's click on, Tony. Yeah, that's okay. So today we've got a presentation on UK and Zimbabwe green growth offer. So we're hoping by the end of today's meeting that you will be aware of the UK's integrated approach to financial sector development and green growth in the Zimbabwean agricultural sector. And we'll be focusing on a few instruments, the British International Investment, which is through NMB, UK and US supported loan portfolio guarantee, and that's with Steward Bank. And then the member ZADT's access to finance for MSMEs, and that's also got contributions from Sweden. So we'll start off today with a presentation from Martin Alsop. Martin is Deputy Development Director and also Head of Green Growth at the British Embassy here in Harare. Martin oversees a portfolio of programs and policy areas focused on promoting sustainable economic growth that builds resilience to shocks and creates opportunities for increased trade and investment, especially from the UK. Martin is an international development professional with a core background in economics and private sector development, including 12 years of working in sub-Saharan Africa. Martin moved to Zimbabwe in July of 2022, having spent the previous 4 years leading the UK's green growth and trade work in Rwanda, catalyzing investment into sustainable tea production, electric vehicles, and clean energy. Prior to that, he worked in Zambia, supporting a range of impact investments in commercial agriculture and set up a fund through which the UK government co-invested in early stage growth business to create jobs and drive private sector-led growth. Martin previously worked in financial services regulation in London, and earlier in his career worked as an economist and ODI fellow in the Nigerian Debt Management Office. So, Martin, would you like to come up and
this is for the people online, is it?
Yes.
Anyone, I can't see anyone online, but if you're online and you can't hear very well, then somehow communicate and we'll try and fix that. And hopefully there are some slides that will magically appear. But thanks very much, Michael, for the warm introduction. When you hear your bio read out by someone else, so that it feels quite strange. But anyway, yeah, I've been in Zimbabwe 2 years now, which is very exciting and rewarding, and I'll talk a little bit about some of the work that we're doing. As you said, I'm the Deputy Development Director at the British Embassy in Harare. That means I have partly a role overseeing all of our development work across the embassy, but also I specifically head our green growth team, and I'll talk a little bit about what that means and some of the things that we're doing today. I won't talk about everything we're doing, and I'll try and focus on some of the things I think that you'll find the most interesting and relevant, hopefully. And I think we've got 3 other panelists that will come up after I've finished, and you'll hear more from them. And I think you'll be probably far more interested in what they have to say than what I have to say. But thank you for the opportunity to speak briefly anyway.
Just a second.
Slides, I'm sure will come up, yeah. So we can just move to the next one. So it's Green Growth. Our Green Growth team is a relatively new team. It was formed just before I arrived, and I've really been building it for the last couple of years. And I'm happy to say I've actually got 4 colleagues here with me today, but Faz was missing. So can you just put your hand up? Yeah, he's right to that. So I've got 4 colleagues from my team here. So feel free to ask difficult questions that they can help me answer. But what do we mean by green growth? I always think if you ask 10 different people what is green growth, they'll give you 10 different answers. It means a lot of different things for a lot of different people. I'm not going to try and define it categorically here. I just want to give you a simple sort of explanation of what kinds of things we're talking about, but I'm not really trying to define it. And for me, it's a statement of intent and it's a direction of travel. And I think green growth, we should be thinking about climate in everything that we do, whether it's economic growth or whether it's working with civil society or health. I think climate is such a critical issue. So it really is a statement of intent and direction of travel that we want to be moving in. But economic growth really that is climate resilient and environmentally sustainable in very simple terms. So we do want to support economic growth. We think that's really good and important, but not growth at any cost. And we definitely want to support growth that does help build resilience and adapts to increasing climate shocks and is sustainable from an environmental perspective. But we also want to support growth that creates sustainable livelihoods. So we don't want to just support growth that helps a few people. We want to support growth that creates jobs and livelihoods for as many people as possible. And we also have a particular focus on trade-led growth and trade-led growth, trade with any country, but we do have a particular strong interest in the UK Zimbabwe trade as well, and increasing that as much as we can, but not exclusively UK trade investment. So very broadly and very simply, that's kind of what we're talking about in terms of green growth. And why? Well, trade investment and the private sector are really critical to driving sustained growth, to reducing poverty and to supporting economic development. This is aligned with the government of Zimbabwe's Vision 2030, achieving upper middle income status by 2030. You know, they want to create jobs, they want to create a thriving economy. So that's obviously important. And then why green, why climate? Well, I think the climate crisis, we all know, is the greatest crisis of our time. Climate shocks, we feel it very acutely here in Zimbabwe. They're only increasing, whether they're droughts or floods or cyclones. So we do need to build resilience as we kind of strengthen and grow the economy. We need to build resilience, particularly resilience of poor communities to shocks. And we want to, strengthen the ability to adapt to climate change and obviously tackle the causes of climate change as well. So I use this slide just in terms of the way I think about how we structure our team and the way we operate very simply. So we have a kind of cluster which deals with economic trade and investment. We have a cluster that focuses on resilience and adaptation, and another cluster on climate mitigation and finance. Obviously, we will support good things in all of those areas, but the sweet spot really is in the middle, where we can find as much synergy as possible between those interventions. So some good examples, obviously, renewable energy, clean energy is a great one that can support both climate mitigation and resilience as well as investment. So we can support UK companies, for example, investing in solar energy here in Zimbabwe, supports economic growth and investment as well as the climate aspects. Horticulture is another one I'll talk about a little bit, where we can support kind of more of those areas as well. So I just use this as a simple visual to help kind of make sure the team is always trying to find those synergies and use the limited resources that we have to have the greatest impact in the green growth space that we're trying to deliver. Next one, thanks. So there should be another slide in between. Oh, maybe we're missing a slide. Fine. Just check the next one. No, okay, we're missing a slide, but that's fine. So there's a house slide in the middle. I'll come to these examples in a moment, but just in terms of how, the first thing to say is partnerships. So partnerships are really the most effective way for us to achieve and deliver impact as the UK in Zimbabwe, and in fact, the UK anywhere that we operate. So we don't try and do things on our own or think that we're the best place to do something. We will find the best partners we possibly can, and we'll work with those. We work with governments, whether it's the Zimbabwe government or other entities here. We work with the private sector, with NGOs, with international organisations, UN, etc. as well. So partnerships are critical to the way that we operate. And I notice, you're a market linkage association, you're a member association, you make partnerships, you're inherently looking at market linkages, you're making those linkages as well. So I think it's a similar way that we try and operate. And then we have a range of financial and non-financial instruments. So in terms of non-financial instruments, that's things like technical assistance. So very often we can fund or provide technical assistance. We obviously support partnerships, we do policy work, We do research. We try and understand what the evidence says on a particular issue and help various parties use that evidence to make decisions, whether it's government or other partners as well. And in terms of the technical assistance, sometimes that's peer-to-peer partnerships. So actually, as the UK, we have partnerships here in Zimbabwe with government ministries. So we have a colleague from our Office of National Statistics embedded in ZimStat. So he's providing technical assistance directly with ZimStat. We have colleagues from our Revenue Authority and from our Treasury who come here and provide support to the central bank, the RBZ, or the Ministry of Finance on certain technical finance issues as well. So we have direct government-to-government technical assistance. We also fund consultants and other bodies as well. And I think the thing you'll want to hear most about, and we'll talk a lot more with the others on the panel in a moment, is the financial instruments, so the investments and the grant fund that we provide as well. But often the way we operate is we will establish or we'll work through arm's length bodies. So I'm not a banker. We do have some bankers here, and we're sitting in cabs. It wouldn't be a good idea if I was the one deciding how to make loans. I'm not a banker. So we will find partners that have the right expertise, the right incentives, the right financial capacity to work particularly with the private sector. So as a government body, as a civil servant, it shouldn't be me deciding how to work with the private sector or make investments, but we find partners and work through those. Sometimes existing partners, sometimes we will establish those arm's length bodies to be most effective. But where possible, and again, this comes back to the partnership point, we want to support local agencies, local organisations that will far outlive our support. If we come in and provide some funding, at some point that funding will end. We don't want to. We want to make sure that the benefit and the impact of what we are supporting will carry on. So finding local organisations, which we'll talk about more, is a really important part of that approach to make sure that it's sustainable and can achieve impact. And yeah, again, partnerships. So Steward Bank will join me in a moment, and ZADT and NMB as well. Those are great examples of partnerships here in Zimbabwe. And I noticed that CABS is also part of the Old Mutual Group. So we do have a partnership with Old Mutual where we support the Value Creation Challenge, the VCC, which is an annual kind of entrepreneur competition that they run every year to find exciting ideas from young entrepreneurs and early stage businesses in Zimbabwe, put them through a boot camp and incubator, give them the right skills and resources and networks, and help grow those small businesses. So we partner with Old Mutual here as well. So we can go on to this slide. So one of the core bodies that we use is the UK government. It's called British International Investment. It used to be called CDC Group, in case you've heard of CDC Group in the past in Zimbabwe. They rebranded it about 3 years ago or so into BII. They are the world's oldest impact investor. They've been around more than 70 years, and they have a long history of investing in Southern Africa, including in Zimbabwe. And they do it in two ways. They invest directly themselves into companies and projects. So Liquid Telecom is a good example here. They've actually invested more than $200 million of equity into Liquid Telecom through Zimbabwe, but across the region in particular, to support them across Africa. They also invest indirectly or through partners. One example is NMB, and we'll hear more about that shortly. So local banks or private equity funds. So BII has invested, I think, more than $50 million into Takura Capital as well, which is a local fund that invests in some big brands like Cairns, Montana Meats, Labels as well. So this is a way that, so BII is fully owned by the UK government, but it operates at arm's length. They make their own investment decisions, they manage their balance sheets, but it's a way that we, as the UK, can support growing private sector businesses in places like Zimbabwe through those examples. And I'm really excited to hear more about the BII and NMB investment shortly. And the last 2 points here, they're driven by two outcomes. So they're an impact investor. They do need to make a return. So they're driven by financial targets, but very strongly also impact driven. So they want to make sure their investments don't just make a financial return, but have strong positive impact as well. This could be job creation, supporting the poorest part of the population, or tackling climate sustainability as well. So that's a really important part of the IR. Another example of how we operate in the trade space. So we work closely with Zintrade in particular. We are very keen to strengthen trade investment between the UK and Zimbabwe, as I mentioned. Really important here to say that the UK and Zimbabwe have a trade agreement in place called an economic partnership agreement. that gives Zimbabwe businesses duty-free and quota-free access to the UK market. So if you're a Zimbabwean business, you can export duty-free and quota-free to the UK, thanks to that trade agreement. We particularly work with Zimtrade on things like trade missions. So inward and outward trade missions, we've had a few UK business delegations come here in the last year. We've also supported various Zimbabwean delegations to go to the UK. So two-way, we also do events. So we have a big stand at ZADT in MLA every year. We're promoting, again, the range of things that we support to the UK. We're doing an event next month in September with Zimtrade to raise awareness of the trade agreement. What we've realised, our colleagues have done some analysis and realised that actually there are still Zimbabwean businesses who are exporting to the UK who are paying duties when they shouldn't have to because there's a trade agreement in place. And so if we can raise awareness of the trade agreement and how they can access the preferences under that trade agreement, that will save substantial amounts of money for Zimbabwean businesses and hopefully increase trade as well. So we work to strengthen linkages with UK buyers. We have colleagues in the UK who have a large network of buyers who are interested in looking at across this part of the world and in certain areas as well. So we can link those up. And in particular, so I put an example here, horticulture. So I'm sure you all know Zimbabwe grows some of the best blueberries in the world. So we've got a partnership with the Horticulture Development Council, particularly to strengthen their ability to support their members, particularly to support smallholder farmers, to link them into value chains. So this hub and spoke model that you may have heard of, finding hub farms that have the capacity to export, to reach those international markets, and supporting them to draw in smallholder farmers as suppliers, so that we can enable smallholders to benefit from access to big export markets as well. They're also working on training on kind of gender approaches and also climate approaches to make sure that the horticulture members are working in a climate sustainable way as well. And then I put their knowledge and data products. So working with Zimtrade and others, we produce information. So if you're interested in accessing the UK market, there's a range of information we can provide. We have something called Growth Gateway that can provide expert support to businesses looking to invest in or export to the UK markets as well. Let me move on. And then this is just one last example around the infrastructure space. So I mentioned we create arm's length bodies, or we support other partners that are better placed and have the right expertise. So PIDGE, or the Private Infrastructure Development Group, is one such organisation. It's a group of companies actually focused on infrastructure, both development and financing. And we don't need to go through the details, but actually they work across the whole infrastructure project lifecycle, right from concept, early stage development, through construction and operation. So they have different facilities that provide technical assistance or development work, or long-term debt financing or local currency guarantees. So if you can move to the next slide. For example, they've invested $2 million in Mobility for Africa here in Zimbabwe. Mobility for Africa is a fantastic organisation that provides kind of last mile green mobility services to rural communities, and they use custom built electric tricycles and bespoke batteries. So these are electric tricycles, they run off solar, and they focus on women as well in rural areas, so providing transport, which can be supporting livelihoods and income earning opportunities, as well as access to health services. So really helping to transform rural communities in a way that's climate friendly as well. So that's one example of investment through the PIDGE group. The next slide is Zimborders. They invested, I think, $40 million into the Zimborders consortium that constructed the Bike Bridge border post. Just one example of hard infrastructure, particularly focused on trade facilitation. I think you all know how difficult that Bike Bridge border post can be to pass through. So trying to streamline, reduce the cost of doing cross-border trade in Southern Africa through the Bike Bridge border post, and others as well. And then if we move on to this is my last slide. I won't go into detail because you'll hear more from our three colleagues in a moment. But in terms of financial sector development is a critical enabler for the sustainable growth that I talked about earlier, in terms of helping both individuals, households, small businesses and big businesses get access to finance. And I know it's a critical constraint, critical barrier here in Zimbabwe. So these are three examples of partnerships that we've supported to help alleviate the constraints to access to finance. So Zimbabwe Agricultural Development Trust, I think I saw was one of your members, which is fantastic. And again, we have in the past had a history of supporting them, but we've recently come back to partner with them just this year. So we've got a new partnership. We're co-funding with Sweden, ZADT, to strengthen the capacity of 4 banks and 6 MFIs, particularly to increase lending for rural and peri-urban agribusinesses and MSMEs. But you'll hear more about that. Steward Bank, this is a partnership we have with the US, so the US Development Finance Corporation and the UK provide credit cover. These are guarantees for Steward Bank, particularly to help incentivize them to lend more to women and youth-owned enterprises. I think this originally was also available to CABs, but I understood CABs had better offers from elsewhere, so I don't know if CABs are still involved, but certainly Steward Bank, and we'll hear more from them in a moment. And then finally, this is a new investment just announced in August, or July, August, from BII. They've created a £10 million credit line to NMB, again, specifically focused on agricultural exporters as well as sustainable agricultural practices, but we'll hear more about that. So I just wanted to mention that before we move on to the panel discussion with our colleagues. And that's the final slide. But very happy to take more questions later. As I say, that was a very high level run through of some of the things that we're doing as the UK Republic. Thanks.
So I think we'll reserve the questions for the end. And see what the panel up there. But before that, I invite the panel, could we just do self-introduction, name and organization? Because I think it's great for the panelists and Martin to understand who is in the room. So can we start with you, Edson, please?
All right. My name is Edson Magesa. I am with Minerva Risk Advisors.
Thank you. Rodney Shulvechwari with the Agricultural Partnerships Trust.
Good afternoon, Regina Fine, Ms. Venom with the WHH. Oh, I'm Una Nicazino, I'm with the school.
And I'm Jeff Nicazino. I'm with our Fruit Trees Trust.
Unfortunately, I guess I with the Zimbabwean Agricultural Development Trust. I'm Reynolds. I'm with Karen.
I'm the father from Zimbabwe Agricultural Development Trust.
I'm Pamela Mzenda. I'm from the Adventist Development and Relief Agency.
I'm Gabrielle Chapman, and I'm with a company called Interlock.
My name is James. I'm from PHI Commodities.
Beide von so Michael von Kiris and Complex.
I'm Engo Mboweni with Steward Bank.
I'm from the Minister Steward Bank.
Erasmus Boone, NMB Bank.
Rollins Masoka, NMB Bank.
Jane Benitez, Sakada.
Solomon Mungu with MKK.
I'm Tanji Moringa with the British Embassy.
Avi Brown with the British Embassy.
Stuart Oxford, also British Embassy. Derek Namura, World Division.
I'm Tafaza Shiri, the British Embassy.
Tim Skinner with Private. Martin Willis with the Augustine Chibico, Internet Wireless.
Stephen Griffiths from Greenman Machinery.
Danny Roberts, BioX.
Daniel Kilmanis.
William Serebra, Technosemi Tapura.
And Mr. Munyo CFU.
Or could I quite say text? Portfolio Jacob Masawara.
England and Machora. Yes.
You said you were cats.
Mark Benson, consultant, Gold Vision.
If I just flashing right, say it.
Great. Thank you very much, everyone. So I think our panelists can recognize there's a good mixture of development organizations and those from the private sector as well. So I'd like to invite Erasmus, Amanda, Fortunate, and Martin. Please come take a seat up here. Whilst they are coming, I'll just do some more bios. Erasmus Boone is head of business banking at NMB. He's a trained corporate banker with experience in working with both large and emerging businesses. He has experience in strategy formulation, credit and risk management, structured finance and customer relationship management, acquired from local and international banks. Amanda is with Steward Bank, 7 years of experience in business banking and 13 years experience in banking. The focus areas of work under business banking are on providing products and services to support SMEs, including women and youth-led business. He is well equipped in autonomous investments and portfolio management and risk management. And then Fortunates with ZADT, experienced in strategic business development and sustainability programming, in access to finance and agribusinesses. Specializes in analysis of investment proposals, portfolio risks, and returns for adequacy and competitiveness of development and corporate loan funds. So welcome, everybody. So I guess the purpose of our panel discussion is to tease out further detail of these different instruments. And we actually have a team, which is, I think it's joining the dots. So let's have a go at that. We'll start off with Fortunate. Right, could you provide us a brief view of the situation, challenges, and emerging trends in the micro, small, and medium enterprises?
Thank you, Michael, and thank you to everyone. Good afternoon. In terms of maybe the situation that we are looking at, I think in Zimbabwe it's almost all well known, but it's good for us to reflect on the issues that are on the ground. I think when you look at the situation, availability of funding to the smallholder sector is a challenge. And we are in the sector, and I'm talking also from experience. We're trying to facilitate and we meet and we discuss with our smallholder farmers, MSMEs, particularly the area that we are working with, where they are looking at those challenges. In terms of the structural arrangements, youth, women actually find it very difficult to access just general funding into traditional funding arrangements. And when you look at the agricultural sector, is also a bit, or is receiving a little bit less attention, particularly because of the current environmental situation we have in terms of the drought induced by the recent situation. And risk appetite in finding agricultural enterprises very low at the moment. And in particular, when you look at island farming, and for the sector that we are looking at, particularly the farming sector, their farming operations are mainly island, and you find they have a lot of challenge getting funding. Then when you look at challenges, I think, is just the general availability of funding, particularly for the financiers. We get knocks on our doors. In the past, we used to be a wholesale lender, and it takes them to change the street. They provided us with a bit of capital, similar to ZADT. And we had a bit of capital that we could actually only lend to those financial institutions that wanted liquidity support to only lend. But currently we are constrained as the duty, but we still receive notes where they say, particularly the MLA sector, we don't have available funding to extend, given the long-term nature of the agricultural sector. For long-term, they would rather go short-term with the limited funds that they have. So it's one of the challenges that we're looking at. Then cost of funds is not as easy. I think coupled with the limited returns from the agricultural sector, if we look at commercial lending, I think the minimum we have had is 4%, about 4%. And the other sector, when you look at your smallholder SME sector, here it's of actually coming up to close 20 to 36% expenses per annum. But when you go microfinance, it's even much. It's 10% at most, I think. And that's, if you annualize it, it's almost 120. But if you are into business, then you look at it and say, what sort of business can you do that you give you that level of return, particularly in this kind of environment. So we pick that as one of the challenges that we're finding. Then I already talked about the aspect of women and youth, particularly as it relates to electoral issues. Because of the challenges and the situation that we're looking at, definitely any financier will want to be secure. And collateral currently is a big challenge. And for the sector that we've been working with, we realize, I think this is one of the key challenges that makes them unable to get the funding that they require. So what is the current trend that we are seeing emerging after looking at this current situation and those challenges? We're seeing financial institutions, banks, microfinance trying to go into sort of semi-structured financing arrangements, try to manage the risk in a way where you follow the product and they will then lend you to almost like your value chain financing, and you then do models of your cash flow financing arrangements around it. This is what we're trying also to push from ZADT's perspective to the thanks to the funds that we have received from capacity building, both from FCDO and the solution for capacity building, and we're trying now to develop pipelines that follow that same trend and share the financial. And also we looking at, I think the agro enterprises themselves, I think they've also realized that in terms of return, we should then be looking more at more secure markets. So you will then find most of these want to be linked to like the trade arrangements, not to be about trade. We're seeing that trend also emerging where most corporates would actually be like your hub for the smallholder farmers, actually going into trying and develop products or support products that they can then find an export market. So I will leave it, I think, more to some of the persons coming in, and partnerships, particularly when you look at now that arrangement, and you can't be in one. You then have to have maybe when you look at the value chain approach, either for input, for technical support, and also for the open market and leverage of managing the whole process.
Thanks, Richard.
I just make one
Yes.
jump in, Greg, just one clarification. You may have heard him say FCDO. In case you're confused, FCDO is the Foreign Commonwealth and Development Office, which is the legal name of our government department that I work for. But we tend to call ourselves British Embassy Harare or UK and Zimbabwe, because FCDO to most people doesn't mean very much, but that's what he means when he said FCDO.
Martin. Over to you, Amanda. I understand Steward Bank was part of the UK and US funded loan portfolio guarantee. Can you tell us a bit about this? Are there opportunities to upscale this approach in Zimbabwe?
Thank you. So we did run a program under the loan portfolio guarantee, and we are supporting rural communities. We managed to finance 408 shops because we're looking at rural communities and have to put them in good for us to be able to support them. And we've impacted 3,190 individuals or households in terms of impact on this program. And of these 3,190, 69% were women, and of the 3,190, 37% were youth. It was a successful program, and we managed to upscale the livelihoods of these rural communities. We were able to introduce financial products, bank accounts, banking services, as well as financial literacy in terms of borrowing, use of credit, and how to make the communities understand. Because generally, these are communities that are used to grants and the understanding of how credit works, how you have to make repayments, and also the cost of borrowing. It's something that we actually had to take them through our financial literacy programs, as well as the partners that we are working with to train them on these products. And it also managed to help that other banks to develop products that were tailor-made, which meet the needs of this particular group of customers that we are targeting. They were able to come up with a group savings account, able to link their account also to their mobile. So they had a vast experience in terms of financial services, a lot of access to finance through the program, because it's normally a market that, like what Fushman highlighted, it's a high risk market because there's no collateral, and these are usually unbanked because we're dealing with smallholder farmers. So these are usually unbanked, dry farming, a lot of risks that are associated with their businesses. So because there will be no collateral also involved, and these are highly marginalized communities, so coming through with this LPG guarantee was, it then enabled us to be supporting or to provide financial loans or credit to this particular sector, because we now have collateral using the USAID guarantee. But generally through the trainings and also how we were taking the monitoring and evaluation, we're able to have a successful program with an NPL of just below 3% of that particular product. So I would say it was a very successful program. In terms of upscaling, yes, there's great opportunity, but as highlighted earlier, there are issues to do with limited funding, and the way we financial institutions can have access to lines of credit that would be of huge support to such programs. Also, that the cost in terms of monitoring, in terms of training, it can be also weighing in terms of an outlay for financial institutions, and having partners coming to support with some of the technical assistance, with some of the training, as well as the monitoring and research. It will also help us start the program, such programs within the country.
Thanks. Erasmus, we recently saw and heard in the media about British International Investment, or BII. Could you tell us more about the BII NMB loan facility? How does the facility specifically support growth and development within the Zimbabwean agricultural sector?
Okay, thank you, Michael, and good afternoon, everyone. I think for NNB, the coming in of BI to be transparent. I'll just dwell into some bit of background regarding what NNB has been doing in the agriculture space in the past 2 years. So within our shareholding, we have got Rabobank.
Just one second, the panelists, could you speak out, because we've got a huge crowd and we'll bring it back. Let's gather into the topic. Thank you.
So I'll try. So I just want to point out that the coming of BII, I think it was well timed to NNB strategic initiative, and also complementing the national agenda in terms of economic development. So you find that within NNB's shareholding space, we have Rabobank, which is part of our top shareholders within one of our investors called Arise, where there's also FMO and there's a no fund within that investment right there. So over the past 2 years, we have been working with Rabobank in terms of putting up an agriculture strategy that aligns with the national development goals in terms of promoting, food security, import substitution, and so forth. So as we were working with Rabobank, I think one of the common things that we then discovered when we did our rounds of diagnostic programs on the ground was the issue of long-term funding, and I think that's where BII came in and complemented that initiative. So we had engagements with BII, I think, for over a period of 6 months, and they did come with $10 million, which is a 5-year loan, and also offers a 1-year moratorium period in terms of capital investments. So this loan is targeted to promote agricultural exports and also sustainable agricultural practices around your renewable energy and your smart agriculture. And I think the good thing and the beauty about this loan facility is that if you look at its tenure, I think it's one of the longest available credit lines that any farmer can obtain in the country. We have also tried to build and also pass on cost savings in terms of interest rates, charges, and all that ancillary charges to the farmers, because we also secure this money on lucrative terms. So I know fortunate to talk about rates that can go as high as 15, 20 to 120%. I think this loan is well below those rates. Obviously, as a bank and as a loan, we do price for risk. So you find that you get favorable rates than any other loan that you can get on the market. We have also tried to inbuild other issues that farmers face, like around the collateral. Because if you look at a farmer setting up an export-oriented project, you'll find that it's very difficult for someone to secure that loan with your traditional, brick and mortar collateral that the bank normally requires. So we have inbuilt instruments within that, like guarantees in that allows farmers to access this loan facility. One of the things that we've also found on the ground when we're doing our developments, I think Martin spoke about the hub on spot, which we also trying to ride on, so that we ensure that the loan also benefits smallholder farmers. I mean, it's very difficult for smallholder farmers to meet, the export requirements on their own. So the hub and spoke model, I think it's one of the models that is helping us also to allocate some of this funding to the farmers. Thank you.
Thank you very much. It's very interesting. Martin, right. Can you help me connect the dots of the UK offer, even from your experiences in other countries? Why green growth? And earlier on, you spoke of trade-led growth.
Yeah, sure. I think I'll come back to the why green growth and trade-led growth, but just in terms of connecting the dots, I think just to sort of emphasize something else I mentioned about partnerships, but particularly for us supporting local institutions. So again, our money won't be around forever. Our people like me won't be around forever in Zimbabwe, but actually these institutions will be around for the long term. They're strong, financial institutions, banks, ZADT. These guys are in the market. They know the context. They know the risks, the challenges, the opportunities, the partners. And so actually, I think for me, that's a key strength of what we're trying to do, is find good, strong local partners who can play this role. In this case, we're talking about financial services, access to finance. They're a much better place to do that than we are. And so actually us helping enable them to do what they're doing already better and on a bigger scale and hopefully more. And so like with ZADT, it's a revolving fund. So we give them a little bit of money, and actually that money, hopefully will come back to them and they can repeat that. And so that impact will carry on. It's banks as well, the scale that we're doing. So I think for me, that's joining the dots. They're different institutions targeting slightly different bits of the market, but very much in the same kind of, there's a big agricultural theme and there's a MSME theme we've heard, and to some extent limited youth as well. So I think those are important priorities for us, and working through these organisations, hopefully we'll have longer term and bigger impact than we could on our own, for example. So for me, that's kind of how I would join the dots. And to maybe, to talk about why green growth, I mentioned this a little bit, but again, this aligns with the government's Vision 2030, and kind of we all want Zimbabwe to succeed. We all want Zimbabwe to kind of continue growing and reach the heights that it can reach, and to do that in a way that brings everyone with it. So we definitely want to support inclusive growth and growth that creates incomes and generates revenues, and those revenues can fund central services to support kind of that whole economic development. And again, we want to do it in a way that's climate resilient and sustainable, because we know that Zimbabwe does suffer from climate shocks, and sadly those will probably a little bit worse. And so finding ways to protect the most vulnerable and to support growth that can continue through those shocks, I think is critical. And just on the trade-led bits, I think without getting too technical, but I think trade-led growth or tradable growth is really important. We've seen from countries around the world that actually that's the way to achieve sustainable economic transformation. I think you can grow to an extent if you trade with yourself, but actually the more you trade with other countries in the region or globally, the more you can grow and benefit. It opens up economies of scale, bigger markets. Particularly, it opens up competition, and that competition we've seen is healthy because it stimulates innovation and that drives productivity. So actually, if we really want to drive productive growth and increase productivity, you need that healthy competition. And you need to find, what's Zimbabwe really good at? How can we find those specializations, those niches that we can really focus on and get really good at and compete, and that will help drive productivity, that will create jobs and livelihoods and the rest. And also tradable growth exports, they create hard currency, don't they? You need hard currency to pay for imports and other things. So that's a benefit, and it's a win-win from a UK perspective. Trade more trade with Zimbabwe is good for Zimbabwe, it's good for us. So we want to support that.
Thank you. Thank you. Erasmus, on the BII, can you sort of elaborate on how this investment, the BII and investment, will impact on agricultural enterprises?
Thank you, Martin. So I think there are a number of impact opportunities on the agricultural investment space, but I think I'll just touch on what I think are the five, that really speaks to this facility. So the first one is the access of the right funding by farmers. I think if you look at the number of horticultural projects or projects that are being undertaken by most farmers in this country, I think 5 years is quite a decent basis of training up for someone going to be able to start servicing a loan facility. The moratorium that also comes with the loan also gives farmers the breathing space when they set up or scale up their projects without them putting pressure on the cash flows. So I think this is the biggest one. Farmers are really getting the right type of funding, and especially for the projects that are done with the space of agriculture exports. The second impact issue is around scaling up of operations, which also links to the first point, because with the right funding, then farmers are able to scale up their operations and also fill in the market gaps that are there, especially for Zimbabwean products. We have engaged through one of our partners, HDC, to fund the blueberry sector in this country. And when we then engage these farmers, the demand that they point in terms of seeing blueberries in the European space, I think we are less than half of the market demand there. This facility is coming in to fill in the gap and close the gap of the market demand from some of the high-end products that are required in the export markets. The third issue is around job creation. I think as farmers expand and also within the value chains, obviously jobs are created within the chain, within the expansion program, which is good for us. I think as a country we've been struggling a lot to incorporate our graduates there. I think these kind of facilities that allow expansion and growth in sectors like agriculture is then cause the job creation issue. The fourth impact issue is around food security. I think the region, there's been impacted by climate change. I think we've had various cycles for El Niños, droughts, or excessive rains, and climate change. So
Not climate change, natural funding.
yeah, so you find that if you look at the portion, which is about 30% of the fund that is earmarked for climate resilience programs, I think it's a dedication towards ensuring that there is food security and continuous food production within the country. And then lastly, the fifth one is on the sustainable agricultural practices. And this is being enhanced by the long-term investment underpinned by the 5-year loan. And I think it guarantees, financial health and growth, and also an environment that can benefit from this facility. Thank you.
Thanks very much. Fortunate. Could you tell us a little bit more on what you're doing on financial literacy? Importance of promoting good financial literacy education for MSMEs and the agricultural sector, and what are your own experiences in this area?
Okay, thank you, Michael. I think I'll start with the last part because I think that will define what we are doing in that sector. When you look at our experiences in terms of what we've been trying to look at, when we requested for the funding for financial literacy development, we then tried to go through and see what the sort of proposal or business plans the smallholder sector, the SMEs were providing to the financial institutions. Because we're having this cry that whatever we are submitting to the banks is still planning or still not considered. And when we looked at some of the proposals that were also being presented to the financial institutions, I think the financial institutions were also in their right, okay, not to even look at them. But some of those really would not make when one would just write a line and they say, I need money for and there is nothing else to support. There is no thought process to it. So in terms of financial literacy, what we then did was to then go back and start to look at, and I think when you look at our causeway acronym, it's actually talking of creating adaptable and unique systems of financing entrepreneurial women, not just every woman or every youth. You have to be entrepreneurial. So we have to start from that. Are you really looking at yourself as a business person? Are you really looking at your operations as a business operation? If not, then maybe what you may be looking for is not a loan, but maybe a grant or some sort of support from someone. But if you really want to get a business loan, then you have to start yourself and appreciate that what you are doing is a business. Look around yourself and say, do I have the resources to enable me to do this operation? Do I even have a zeal, which is one of the most important things that we look at, even the passion of doing what you want to do, or you just want to access funding and then the following day you're not. Then at the same time as well, you then want also to look at do you have the markets? Where are the markets? Who is going to provide the technical support for you? Then once we establish those 4 pillars, you then look at where are you with your resources. Maybe you might not even need to borrow. May actually be able to start with the funding that you have, and then build it up, and scale it up to a business level that requires funding. So that's the process that we are taking with the smallholder farmers and the SMEs that sector that we have. And once we have put this in place, we then take this to the financial institutions as pipeline businesses. For banks that will have, or microfinance institutions that will have their own funding, they can then directly fund, because we don't funding. Ourselves, we don't fund directly, we fund through financial institutions. We are not a licensed bank, so we fund through our financial institutions. And in that process, what we also look at as well is it's not just handing over. We have the field, the development field officers that are on the ground, who also follow through the process that we taken through the bank, and they then assist and work together with the bank to ensure that whatever we taken these participants through, so we follow through on the ground. So that's the process, one of the processes that we look at. Then the other part that we also look at is an aspect where we then have to look at their financial record keeping. Are you able to check what we are doing and ensure that it's profitable? So once you are able to do that, I think it's also easy to create a check record with your financial institution, and they'll be able to give you additional money. Even the Erasmus talked about, if we can show us where the money is, we can, they could also provide the funding without the authority. I think that in most cases, money disappear as soon as you can. You're not even sure where your money is sitting, whether the put is going to be implemented or being implemented, whether it's going to fruition. So if you've got a support structure that shows you can follow that trend and move with it, I think something in the structure around that. So for us, this is the process, I think, in terms of financial literacy that we're taking through these processes. But it's important to then say it's established along those pillars. They say, look at yourself as the demand on the demand side. What is it that you're putting in place? Before was as ZADT, we then also look at the financial institutions and then say, here is a group, here is a pipeline that you, but what are the challenges that we are seeing on these ones? And we try and also learn from the bank and then take it back to the demand side. So we're working both on the demand and the supply side. So the financial literacy, yes, is the agenda, but I can sit down with him and teach him one or two things. Yes, I think, don't you think we can do it better this way instead of this traditional way of doing it? And that's the intervention that we are doing also. So we are more or less like the middleman, go between, try and put the demand side and the supply side to understand each other. They need, but they need, of course, financial literacy in development financing. The smallholder farmer or SME also need some extra info as well in terms of how they can access funding or present themselves to actually be attractive.
One thing, thanks for example. I think, Amanda, you also work with SMEs. What are the critical success factors of the loan portfolio guarantee in influencing access to finance in the target sector or a group or geography?
Thank you. So when you look at the portfolio guarantee, for banks and financial institutions, it is more like a secondary form of security. So what we actually are or try to achieve is that business operations are able to sustain their operations as well as service the loans through their operations, not necessarily us then going to the guarantee. So what is key, Bushnet highlighted, I think for their three success factors hinge on financial literacy. So we find with this group or sector of customers, the small to medium enterprises, in terms of record keeping, in terms of financial analysis, in most cases they fall short. And this is where partners like ZADT come through with the financial sector and also come through to assist them to come to a point where when they bring down their proposal or when they bring their applications for funding, we are able then to meet and agree on certain parameters to say they have the paperwork, they are registered for them to operate a business. They also have financials that they follow through, they know where their money is, they're making a profit or they're not making a profit, where do they need the funding, how is their costing in terms of the funding. And can they incorporate that in terms of their mandates? That they made an analysis of what this government actually need to improve their business going to actually work in business if they don't have proper knowledge about them using this financial instrument or using these loans in their businesses. So financial literacy is key in terms of them achieving or improving their operation. We're also looking at having off-take arrangement, market linkages. So like the example we're working at when we're working with smallholder farmers, it is key also to have off-take arrangements where we also find the off-takers so that they can then be able to take these products or link the smallholder farmers to market. So also market linkages are also key in making sure that these SMEs are successful in their operations. We're also then looking at issues to do with lines of credit. This will always be key, especially for us financial institutions. I think Aris is also highlighted in terms of the cost of this funding. Interest rates are averaging 12-25%, true to what we can finance in terms of us having putting a bit of margin in terms of the deposits that we have or the funds that we have available for us to on lend. But when we have these lines of credit in terms when for more favorable rates for us to then on lend, this will also be able to assist with SMEs. It's a key critical success factor because they'll be able to access funds which are affordable, which they can then incorporate in terms of the cost in their overall performance of the business.
Thanks, Amanda. Martin, I think there are some other development programs, interventions in the UK and Zimbabwe. Could you which is important, particularly linking agriculture and access to renewable energy. Can you say some more about this?
Yeah, sure. I think just earlier on, you were mentioning how a diverse range of both private sector and development partners we have here. And I think you also boldly titled this session something about an integrated approach from the British Embassy. And I do think we are taking an integrated approach now, whereas 5 years plus ago, we probably didn't do so well ourselves. But actually, the green growth team I talked about, we very much support both the private sector as well as development partners in the development space. So yeah, I'll mention a little bit about some of the development stuff we're doing, but just to say on the private sector, my team also works with particularly British private sector partners. So the Solar Central Africa is a solar developer. They're working here, developing and financing solar projects. We have Africa Green Co. It's another British company that's looking to help de-risk investments or take away some of the risk that investors would see in the renewable space here. We have Infraco, one of the pitch companies I mentioned, that are also doing solar developments here as well. And I can see Shanta crept in the back. She missed my slide on mobility for Africa earlier, but actually some of the stuff they're doing, while you might not obviously think it's linking solar with agriculture, actually they are doing bespoke battery-powered, solar-powered tricycles that help women access markets and that sort of thing. So that's a really nice example as well. But I guess one of the other development projects we have is called CAWAP. It's the Climate Adaptation Water and Energy Program. That's a program we're funding through the UN, the UNDP, in this case, but working very closely with central government and local government, particularly to increase rural access to water and energy infrastructure, particularly climate resilient water and energy infrastructure. So we're talking about really remote areas like Binga, like the Quata, and we are funding and working in partnership with the communities to develop solar mini grids and multi-use water there. So particularly irrigation schemes that are market oriented. And I think one of the challenges we're trying to overcome in this particular project is sustainability of this infrastructure. We probably all know dams that have run into disrepair, or even solar installations that have run into disrepair because they don't get maintained. So actually, we're trying to develop a kind of a business management model that enables the local community to maintain these, to have the skills, but also to have the income to maintain them, and a sort of insurance scheme to make sure that when something breaks down, there's some money there that can pay, they have schools available locally to repair those, whether it's irrigation schemes or solar schemes as well. So yeah, those are really exciting projects that we're working on. I think that quite many will be commissioned, I think, in October, and it's the largest mini grid in Zimbabwe. So that's exciting. And again, areas that haven't had power before and have really suffered.
Back to you, Amanda. Your experience in SME banking, how can other development partners assist in facilitating access to finance for SMEs? And what do you think, what do you desire to achieve by participating in such programs?
So in terms of what development partners can actually assist with, one, we're looking at technical assistance. They can come through support these communities or these small to medium enterprises in terms of financial literacy, technical assistance, use of equipment, use of machinery, also the know-how, technical know-how and knowledge in terms of financial instruments. They can also come through to assist with initial sort of selection, credit vetting of these potential borrowers, where they assess because they have the financial muscle to put it right. They can actually assist in researching and having models that they can actually work through with these potential borrowers so that they can do a pre-vetting for and assist them to come up with bankable proposals to help them onboard them in terms of them understanding the financial product or how banks actually interact in terms of us awarding credits to such sectors. Also, they can come through to assist us with the obvious lines of credit liquidity. I think it's quite tight and some situation, and having those coming through the development partners will also be something that will assist us to be more supportive in that area. Also, we are also looking at the development partners helping us with monitoring and evaluation. So you find that like when we're looking at these small to medium enterprises as well as the rural communities, the reach is wide in the geographical reach. Also, the numbers that will be dealing with, they're quite huge numbers. And in terms of cost, actual outlay for banks that will monitor and evaluate some of these projects, it becomes so costly that it might then deter some of the inroads or the various initiatives that we want to pursue. But if we have partners that we can work with, also in terms of monitoring and also evaluating these businesses when they operate, as well as providing that reporting and constant monitoring, because they need that close relationship. We're constantly looking at what they're doing, even if they're private. We, like what I highlighted when we spoke about our program, it was quite successful because we had community-based relationship officers who were actually on the ground doing daily monitoring, training, and assisting these groups as they did their work. So that is also key where we have this development partners coming through to have this monitoring and evaluation as well as reporting to support the financial institutions so that they're not weighed down by the cost of having these programs running across the country. Thank you.
Thanks, Simone. Fortunate, I think smallholder farmers, there's a lot of perceived risk around them, which affects their ability to access traditional sources of funding. How is the project, which I understand is being supported as well by Sweden, helping to de-risk in this sector and change that perception?
Thank you, Mike. Risk, as you already said, I think it's either it's perceived or it's real, but either way, you have to manage it. And so you have to identify, find a way of managing it, and so that you reduce and come up with, I think this we price for this, then you come up with the correct pricing. So yes, risk is related with that, but it's how we then identify and then manage. And within the project, what we have done is we're looking at one, starting from the demand side. So your risk normally comes up with the character. We take them through that process. Say, this is what you have presented yourself. You are at your suitor, who is your parent. Can you present yourself in a manner that the proposal is going there? Let it show that you are serious to this person. You need to show you understand what you're doing in the business. So let's show a story that someone reading, not you explain, someone reading through should be able to follow through what you want to achieve, and also what you require, and what you need for, and also how they get themselves back. So, then the last part I think is also maybe also for the supply side, and then also more in so this is what we have. How best can we mitigate this pandemic? So either way, there's appetite, the financial institution will take risk and use their own money, which is what we are trying to do under the COVID project. Because we are saying we have limited funding, we don't have enough funding, so we would want to use the private sector funding by the banks, microfinance institutions, to finance this project that we don't capacity. If that fails, then we look at ourselves and say, we have capacity because we have limited resources. Yes, we received funding and we committed funding from the British Embassy. And we also committed part of our funding to support this project. But we are saying this has to be justified to prove the concept of the financial institution that this works. And when it works, we expect the financial institution to check this through and then the funds become sustainable. If we had a big pocket, we would want to continue doing it. We don't want to replace the banks, we don't have to replace anyone. What we just want is to capacitate that process of access to finance on a sustainable basis. Then if the second hurdle fails, you don't have also the funds, and there's someone else or the bank has the money, but they are worried about the risk, we also look at risk share. We can also provide guarantee cover and provided the bank or the financial institution is prepared to take risk on ZADT, then we provide a guarantee, provide above the guarantee that you can you can then access. But when we share this, we are now not able also to provide additional funding. And I think this is one of the problem challenges that we are getting on the project. The financial institutions, institution wants liquidity support. At the same time, with the say, if I give you the support, you take risk. Then they say, no, I would want you to come and participate in shares. Then I say, that's, I'm just giving you a grant, because if I give you money and I guarantee, then the other part of all in terms of the financial institutions, I think in terms of the structuring, it's how they do pass on, like when you do this sharing. For us, when we share this, we don't want also that guarantee to be disclosed. Otherwise, if it is disclosed, if the person is going to receive the money, they say, yes, you are getting money from ZADT, and they see at the back of it, particularly for all of you, you know, we founded by UBOS, SLB, we on our funding structure, our financials are there, they will show part of the money from the meter, Swedish embassy, British embassy. Then what they are saying are grants running through. So who would want really to have this guarantee disclosed and for our other purposes? So yes, this is the risk part that we, the mitigation that we're looking at, but also we facilitate the structures. I think I would want to, Amanda has already spoken more about it, where we put on group structures, and I think Erasmus also spoke about the how to stop. And this has worked actually for us on a number of ways. We've done kettle on that basis. We've done chilies, we've done sugar, we've done horticulture, and currently, I think for Erasmus, I would want also to challenge you on an export for smallholder farmers on one of the projects that we are looking at, and it's on the similar stock hub situation. And what we need is how do we get them funded? So they already have the hub. They won't go on one or two cycles, and we want to believe this is a process that we can do.
So looking ahead to future arrests, what are there any plans for expansions being considered by the VII NMB loan facility to further enhance support for the agricultural sector?
Thank you, Michael, and fortunate, I think challenge accepted. Very much willing to look into that. So thank you, Michael, on the future plans. I think for me, when I look at how BII is coming to assist the market, I think it's coming with an inclusive approach, which does not only include the physical case in terms of requirements. If you look for what Fortunate is doing in terms of capacitating smallholder farmers, I think it's quite noble. And then also among the guarantee schemes, quite noble. And also, I think the investment that was put in HDC to create the hub spoke model, also quite noble. So when you then look at this inclusive financing arrangement that BII is putting in the market, I think there are growth opportunities that I foresee in the market. And I think for us to expand and grow on this facility, it's not only MNB and BII, but I think the various actors within the chains that also support the farmers in various ways. I think our performance as NMB as a bank in terms of responsible lending, farmers also in terms of responsible application of funds, I think about Fortunate highlighted that out. And then the entire value chain, the responsible servicing either of the farmers. I think if we then create such an environment, I think it's huge opportunity to upscale this facility with BII. The issue for export growth and also sustainability, I think which will remain key, I think, given the various initiatives and also correction measures that are required around the climate resilience and building climate for agriculture production. So you see that not only the facility will benefit from an economic perspective, but it also will ensure long-term food security and also as a country to farm in a sustainable way. So with all of us, I think there are opportunities for us and BII and also other partners to expand this credit line in not the United States double agriculture space.
Thank you very much, your essence. Our final question goes to you, Martin. The embassy has invested in financial sector development. Can you conclude on that by talking a little bit more about trade-led growth? How are you supporting trade capabilities in the sector?
Sure. So just on the trade thing, just to reiterate again, we have a trade agreement in place between the UK and Zimbabwe. So one of the things we're doing as much as we can is to just raise awareness of that. And so we are working with Zintrade and we're hosting a hybrid kind of session next month focused on Zimbabwe markets to raise awareness of that export opportunity and UK market and how to access that. We'll be doing something similar with ZADT shortly after that, which is more focused on the UK market and the opportunities here in Zim and how to raise awareness in the UK of opportunities for investment. So working with partners like ZADT and Trade in particular. But then we have a particular program called UK Trade Partnerships, which is implemented by an organisation called the ITC, the International Trade Centre. They're happen to be based in Geneva, but they implement this program for us. And it's over the last couple of years, it's done some really interesting things. It's worked with HTC. I know we have HTC here in the room, and we've heard them mentioned quite a lot, the Horticulture Development Council. So we've worked particularly with HTC to develop this hub and spoke model and particularly use the hub farms, the export ready farms to kind of get over that last mile, how to reach the European market, UK market in particular, and then how to draw in the small hog supply. And we've just started a new round of support that I think is kicking off in the next couple of weeks with HTC specifically on, again, strengthening the providing advisory services to farmers and support to SMEs, particularly to reach those UK and European markets. We've done some really interesting work through UK Trade Partnerships as well on women-owned SMEs and women entrepreneurs, something called She Trades. So identifying and supporting women-owned businesses and giving them the skills. So it's not, we've heard a lot about finance and access to finance, which is obviously a critical constraint. But actually, even if you've got the money and a business, that doesn't mean necessarily you know how to reach those export markets. So what we try and do is kind of fill in the gaps and bridge that last mile and give people the knowledge. Sometimes for these women-owned businesses, it's skills around how to market their business, how to do their business accounts, how to do pricing strategies, how to do communications and photography and like displaying your products to the international market, those sorts of things. And so we're able to support a group of them to visit the UK earlier this year to a trade fair in Birmingham that was particularly focused on creative sectors, so interior design, jewellery, that sort of thing. So some Zimbabwean women were exhibiting in the UK earlier this year as well. We then showcased some of this stuff in Bulawayo at ZADT, and the president came through and spoke to one of the ladies about her products as well. So she was excited about that. So the UK Trade Partnerships Programme is trying to build that support, as I say, women-owned businesses, but now a new partnership again with HTC to kind of specifically focus on the horticulture sector. As I say, blueberries here are some of the best in the world. We need to get them exported around. Thanks.
That brings us to the questions that I have. But I wonder if there's any other questions for any of the panelists here. And you did start.
Thanks so much to the panel for the insightful discussion. My first question goes to the banks, any of the banks. According to the last FinScope research, it says only 14% of the SMEs are banked. Then I'm seeing this exciting opportunity. For me to access the credit as an SME, the first step is to be banked, but we have only 14%. So how do we incentivize SMEs to be banked, particularly looking at the demographics that SMEs are youth, in the rural area with no collateral? What incentives can we put in place to incentivize that that they come on board into the banking sector. Looking at transaction costs, the bank charges, they are not only affecting the SMEs. I think personally as well, they're hitting me hard. I think that's the first question. Then I think the second question goes to Martin. Exciting to see project finance work within borders. But looking at the stats globally, we still have relatively less of project finance coming to Africa. What's been the challenge for African countries, or maybe for Zimbabwe, to tap onto project finance? Looking at our needs, I believe we have many needs for project finance in energy, health, roads, dam construction, and this opportunity is there. Do we understand, does our government and private sector understand this opportunity? What has been your experience working in Africa? Thanks.
Any other bankers want to take this?
Thank you, Michael. And I'll go first and understand support on that. So in terms of what we're doing, actually, the statistics are very and very certainly with the companies that are contributing 64% to the GDP of the country. So what we've done as a financial institution, we've the setup of incubation hubs, where we actually, because what they need mostly is knowledge for them to understand the need for banking industry, for them to understand the need to have a relationship with the bank, how it helps them in terms of their business, how it helps them with access finance, as well as also network with other businesses and have access to markets and also access to funding across other benefits that they can get by having a relationship with the bank. So there's need for them to have knowledge, which we've been trying to impact. To share with a particular group of people through our incubation board, as well as forums that we have, particularly targeting the SMEs, youth, and women-led businesses. We've also come up with product digitization of most of our services and products, so that they have ease of doing business. They can easily open accounts where they are, wherever they are. Is it in a rural community? As long as they have a mobile phone, they can open an account and transact on the go. They can access funds in terms of our Kashagi variations, loan products, which are also available on digital platforms. And they can also be able to have information coming through our various apps that we have. So digitization has also been something that we've supported, or we're pushed to actually make inroads to support this group of customers that we need to tap into to improve those numbers, where we've got 14% being banked among the population of SMEs, which are around probably 3 million in terms of report as well. So we are working on incubating them, training them, giving them knowledge for them to understand why it is important for them to have a banking relationship. We're also coming up with services and products that we have digitized so that they can actually have access to these wherever they are, and it's easy for them to transact, just like how they do with cash when they have these mobile apps and also these banking products. They can also easily transact and have their banking made easy wherever they are. And we are also nil KYC accounts, so that we don't need all those registration documents for them to open an account. For example, this is mainly targeted at making sure that those that don't have registration yet, although we'll take them through the incubation so that they're registered and formally able to then actually come some more for it. But we have an initial way they can start off with these low KYC accounts and be able to bank and start their understanding of how they can continue and also improve their business.
Anyone else want to contribute?
Yes, so I think quite an acknowledged challenge that we have in the market there in terms of the unbanked. And I think, like what Amanda said, you'll find that a lot of initiatives being done, starting national level, regulatory level, Reserve Bank, individual banks. So starting at regulatory level, you'll find that in the central bank, they're putting a financial inclusion department that also runs in annual events, the financial inclusion week. I think where all financial service providers in the country do various initiatives in our market to ensure that we increase the knowledge and also the relevance of crowding in these SME customers. One of the things and the challenge that we continuously work together is to try and improve being relevant to these SMEs, because I think the reason why they are in pain is that they don't see the need for a bank. And I think with the partnerships and in the investment that we are getting from the likes of BII, I think the relevance for banking is now more pronounced. You see what ZADT is doing, the work that Zoomtrade is doing, HDC is doing, the banks are doing. So I think with those steps, we have created initiatives that will start crowding in and increasing the access to finance for SMEs.
Fine, thank you.
I think the I can trust.
Thanks for those responses, Mark.
Sure, I have to say, I mean, it's a great question. You mentioned FinScope. So if people aren't aware of FinScope, it's a financial access survey, demand side survey. UK funded that FinScope survey, actually. Just I didn't mention it, but we funded FinScope here, the MSME survey. We funded FinScope surveys in many countries across the continent. Just another way of facilitating access to information and access to funds. But on the project finance, I think I'd probably say one word is currency. I could talk about lots of challenges, but for Zim, I would say currency. And whenever I talk to international investors, that's the challenge here is, can they get their money out? They want to invest in dollars. They want to be able to get return in dollars and take the money out of the currency, out of the country. Every international investor I've spoken to was very welcoming of the government's legalizing the use of USD and extending it to 2030. I think some are beginning to worry what happens after that or after 2030 or if they end it earlier. But the use of USD here has been very helpful. But still, I think it's, international investors, I guess that's what we're talking about, want to know that they can get their returns in dollars and repatriate profits appropriately. There are all sorts of other challenges as well. I think across the continent, I would say bankable pipeline of projects is another big challenge I hear about. Often you'll hear there is money around internationally looking for projects, but actually that pipeline of bankable projects is often a challenge. That's why I mentioned very briefly, I was over it, but the Pitch Group has a range of companies across the infrastructure project life cycle, including from early stage development through to kind of financial close and long-term debt financing and local currency guarantee. So interestingly, I'd say in other countries, often local partners want local currency financing. Here, so the Garanco provides local currency debt financing. Actually, here, it's usually people want dollars. It's a different scenario, but we all know Zim is very special. Then just, yeah, and so I mean, so Zim Borders, the example you mentioned that I spoke about. Currency, as I say, so Zim Borders obviously has the ability for dollar revenue and even offshore revenue. I mean, various investors I've spoken to are always interested. Can I keep money offshore? Can I get returns offshore? Can I get dollar revenue? That sort of thing. So the opportunities that I find international investors are most interested in are the ones where there is hard currency revenue. Zim Borders is a example there. I'm not intimately familiar with the structuring of that deal, but I know that they're able to get dollar returns from that investment, obviously in the supporter post. The other main one that I engaged with I hear about talking about is the solar side. So lots of interest in solar energy here, but usually with mines as a sort of energy offtake. People are worried about the offtake risk with a partner like ZADT, and that's not unique to Zimbabwe. Other state utilities across the continent are in challenging situations, but actually if you've got a mine and they're able to export, they can earn dollars, you can ring fence your dollar return. So that creates, people are then interested in looking at structuring those deals where they can secure those dollar returns. I think, so again, currency is, I would say, is challenging.
Sure, thank you, Martin. Any other questions? Duncan?
Hi, thanks, that's very good. Sorry. No, I just, you spoke about hub and spoke, which obviously, is, I mean, Zim used to have big commercial and now we've had land farm and now we've got small scale farming. I'm just wondering how big that is because I know in Kenya, it's, the figure I've heard is 4 million small scale farmers as part of the export trade. It's obviously been a huge impact in improving livelihoods. So I'm just wondering, do we have numbers and is that growing and how's that being organised? Because I think I've heard sporadic examples, but I just wonder if there's any formality to it. Secondly, just while I've got bankers in the room, I'm not going to talk about what the international financing subset should be doing, but in Zim, we, as well as the cost of banking, cost of corporate compliance is very high. And if you look at the Zim Chamber of Commerce, it's like 20% of your costs are admin and compliance, whether you're in school or you're us or you're a three-man show. So this is a huge cost of doing business. And so on that front, I mean, I have engaged CEDA, but we really need, we need the banking sector to really engage government on startup and progressive rules. There is no startup culture. There are a lot of startups, brilliant young Zimbabweans, but when it comes to the regular traders, we don't have any formal startup policy or act or progressive ways. So you start a business, you're automatically stuck with a huge tax bill and corporate compliance, and then you don't want to go to a bank because God knows that's just adding to my. So I feel like there needs to be more honesty, and I'd like to shake up the banking industry because you traditionally are, or you are traditional. And I mean, there's been a huge exciting debate going on in the continent about credit ratings and why everyone outside Africa decides Africa's credit ratings and usually gives us very high risk scores. We need to challenge the status quo, and I just wish the banking industry would be a little bit more on our side of shaking it up. Because I still feel like you're living in the 80s.
Things are coming high.
We can really see where we are saying.
Thanks so much, Michael and Finance for the business discussion. So I think the discussion on stimulating, a win-win business environment is very critical, and we are getting that report, report and also the sector coming with the boat, which is a really good development to stimulate, agriculture, productivity, and possibilities about it. So, I think following the previous speaker, small farmers and other farmers in Zimbabwe are continuing to be farming at a high risk, which is a challenge when it comes to stimulating economic development in Zimbabwe. So the cost of production, I think that is information is very, very high. And it's good that we still have opportunistic value chains that we can pursue at a profit. But I think also the value chain are not really paid because of the limiting business working environment in Zimbabwe. And it was also good to make government participate in some of these discussions. I know it's most people members, but I think it's important that there's need to relax some of the business operating conditions of our smallholder farmers, so that we stimulate business, not just for smallholder farmers, but for other values, value chain actors such as the banking sector and other in the private sector at large. My other comment is we are coming from a record drought period, and we are also talking of engaging smallholder farmers in terms of loans. Loan financing. Are we taking business as usual, or we may need to also relax specifications so that we are kind of understanding the background to this drought, because it was quite devastating. I think it's a key to our business sector, especially the financing sector. It can be business as usual. It makes 2 to 5 years post that challenge. We are talking of risk sharing. I think we can also consider that. Then the other issue is the loan competition process. As much as we kind of diversifying our reach to smallholder farmers, the financial literacy level is still very low. I think from the discussion, it came out that loan application process is always a challenge. It's not in vernacular, it's in English. And the process itself, mostly they depend more from the local government staff in terms of translating and also the application process itself. What it means, they can't own that product, but they are just doing that for the purpose of loan acquisition. So it becomes a risk when it comes to loan performance tracking. So I think there's need really to relook the application process so that it's more tailor-made for smallholder farmers. I think for the big farmers, it's still good enough, but for smallholder farmers, which are mostly women and youth, it may be a challenge. Then my other contribution is on loan performance tracking. At the very local level, and smallholder farmers level, you would find that NGOs are very prominent as facilitators. But we would want to see active participation of our farmers unions, the market associations, and also the government line ministry staff, which is at the very local level, which becomes more sustainable. So I think that's another area which we can take as an opportunity. I know most of our farmer unions, in terms of the structures, they are not very grounded, but I think it's something which we can stimulate. They also loan performance tracking, which needs to be seamless. We are doing the hardware kind of performance tracking, which also increase the loan administration by our partners, the banks. So I think it's something which we can collectively try to make it more seamless, but more effective. And more.
I think there are a lot of comments there, but would you like an opportunity to speak to any of the no? All right.
Okay, so I think just also respond to the comment on start. So this is very key in terms of future growth of businesses, new innovations, and also sustainability. I mean, we cannot run away from the critical role that startups play, as well as the youth being incorporated in business. But for financial institutions, or maybe what would then require for us to help in this particular sector, because they are high risk in terms of us lending, they are high risk. So as a bank, particularly Steward Bank, what we have done mostly with startups is just taking them through probably having an innovation challenge where they come through, we support them with the price money, not necessarily having them to do a loan, but we take them through the incubation forward focus groups in terms of young people with some new ideas. But in terms of funding, it is quite a challenge because these are very high risk in terms of us having the funds returned. Startups are very sustainable or they are prone to not making it within the first 2 years. So it becomes very difficult for banks or for a financial institution to lend to such businesses. But probably with the support of development partners, we can come up with a structure where we can then work together to support these startups, probably with some funding that we can pull together to support this particular group. But currently it will be a bit difficult because of the risk that it poses and the limited resources that are available. But it's a group that we're very much interested in, in a group that brings a lot of innovation and a lot of future growth in terms of businesses, but it needs a lot of collaboration between financial institutions as well as development partners for us to work together to bring this startup culture what you highlighted. I'm done.
Yeah, just to add, I mean, I don't know if there is any government or policymakers in the room. I think they're vital actually in this discussion. For me, the big thing is informality. So Zimbabwe has a really dynamic informal sector, and I don't know what the actual numbers are, but people say 80% or something of the economy is informal. That's vibrant and they're doing great things, but actually they're not achieving the growth or productivity or potential that they could. And they could be more productive and contribute more to overall growth and Zimbabwe's success if they were formal. So how does I would say the government, but how do we create an ecosystem environment where it becomes attractive to formalise? How do we start that process? And I would personally say formalising by fiat or forcing formalisation is not going to succeed. So they need to think about how do we shrink the informal and grow the formal and make that an attractive pathway to go on. But it's not really like it.
And just to respond to the initial question where you're asking how many smallholder farmers, I think it could be very difficult. I think in the absence of commodity associations, it's also very difficult to check who's doing what. Yes, if you say someone on the farm, but if you are on the farm or on the plot, it doesn't necessarily mean you're producing for the farm. So you would really need them to be. I know there's an audit process that was going on in terms of the land audits and advocates. I think almost every beginning end of season they will also do an assessment. But again, it's what are you producing and who are you producing for, which is quite important because you need to be tracked. And this is where I think the commodity association, I will support maybe the aspect of the unions. They say they have to reactivate this commodity association so that at least we keep track. Blueberries, then you know who is doing blueberries where, who is doing chilies where, and who is doing what commodity where, and that flow has to come through. I think that's a question. And if it can happen, I think that will also be good.
Thanks, folks. Interesting.
Yes, I think on the hub and spoke, you know, I don't have the actual numbers, but I know HDC is actively tracking that development. So probably if you can get in touch with HDC, our own experience when we write only the database, I think we are seeing a number of these hub and spoke, you know, clusters coming up, and I think we are also writing on them. And then in terms of, I think the policymakers again, I know there are various clubs in terms of associations and organizations. And as NNB, we've been part of the NIEPS program, which is the old Command Agriculture program. And when I look at the membership there, I think there are some of the members in here that are part of that organization. So in that organization, I think the Minister of Agriculture holds a meeting every Thursday with all the stakeholders. And these stakeholders are, I think, across the entire agriculture space in Zimbabwe, from the Minister of Agriculture, Extension Services, from the horticulture side, from the plantation side, where various member organizations within that space are giving updates on the micro activities that are happening in their space. So probably again, it's to trade with the Ministry of Agriculture to get aggregated data that then gives us what is happening in each cluster and for us.
Thank you, Refus. Those are questions.
Yeah, I have about 3 follow-up questions from the first question. So only the contributions rather, but I don't know, maybe questions. So it was SME banking, how to grow it. So maybe to the bankers, the value proposition, how you putting it across on the same maybe about the business. You are just saying, come, we have agribusiness financing, we got 10 million from local bank, we can do agribusiness finance. What do you want? Do you want a tractor? Do you want this? Or you're packaging it like, can we get a 2 hectare plot? We can do blueberries on that. The initial investment that you need is X. This is how your business, your cost is around about this much, and you can make this much. So what you're doing to the customer is you're giving them value proposition, and they can buy into the value proposition, and hence they can grow. So if the value proposition is you come to me with what you want to do, you find that the SMEs are not going to bank with you. Then from Martin's side, you have a lot of products that you want to source from this market, that this market can produce, but like the job boards that you put up, you want key workers, you're open, and everyone knows it, and they know exactly what they need to do to be a key worker and to get that design out. But people don't know what to do to do the farm with producing giving that. people don't know what to do to be a Chinese farmer and get to do that and produce it out. So the value proposition in agri-based maybe might need to change. I stand guided. Then I spoke about the markets, which is the product boards. You want blueberries in the UK. How many tons are you looking at this year? So far, what's the deficit? We're sitting at 50%. Guys, you can jump in. So you get a guy who is building a house for 60,000 to get a rental of $400. He can surely decide to move his 60,000 from the house into the product that you want. So for me, it's not in the market, the 80%. It's how well we are packaging the opportunity to engage in export business. Then coming to project finance for Africa, Martin, I think we can start with projects where offtake is in the UK, like blueberries. It takes about 3 years to start harvesting. That's a project. We are sitting at 50% of the market saturation. So it means people that can bring their money in on the expanding blueberry production that can then be administered by the financial services institutions. They are guaranteed because once they get the product, it's going to come to the UK and the UK has to pay them. So when the money gets into the UK, they can get their money as hard cash before they need the money. So we could start with those development finance projects that are like that. And I think that will open up a lot of formalization channels for SMEs where, I'm going to do this if I get the right knowledge around what I'm doing. In agronomists, in all of these are people that help me with financial literacy. I am definitely going to get about this much in a return, and you can get a lot of formalization coming. I think she spoke about the policy, the startup policy. I think it's overdue because it lessens the burden on the startups. I think that's a problem. Thank you.
Tony, can you go to Michael at the back first, because he's going to respond about the hub and spoke.
I'm not too sure that the mic, I think I can do those on.
Thank
Yeah, right. Up in food, I mean, if we take the wider agriculture sector, we have hundreds of thousands of farms. In the wider context, cotton and tobacco are very much up and spoke. And if you talk about cotton, they kind of not invented the system, but really made it big in Zimbabwe and the whole of Africa. And it's very important, both cotton and tobacco, some might not like to hear about tobacco, but nevertheless, it's based on strong marketing. We're having thousands of farmers in Zimbabwe working in the wider context and up and spoke. In the horticulture sector, it's a lot less. It's a few thousand at this point in time. And with that, while I have the mic, I throw it back to the panel. The problem is that horticulture crops we are talking about are very high value crops, so it needs lots of investment, and that money isn't there. I'm wondering whether I'm the only old person in this room, but I remember in the 90s there was the previous AFC that made money available to smaller farmers. And the difference, with all due respect to the current banks, is they had agricultural knowledge. They could go to the farm and verify whether what I'm telling them in terms of yields and in terms of revenue is viable, and then made money available. And they had monitoring in terms of not only financial, but they had monitoring in terms of agricultural performance. And they received donor money, and a lot of that money went into the smaller sector, and a lot of that was paid back. So I think there's a lessons learned, some lessons learned in this country, and build on. And last week, please don't mention blueberries in the context of outgrow up and spoke. It's the one of the few crops where it doesn't work because the investment costs are like $100,000 a hectare, and you need 25 hectares plus to verify your pooling facilities and exports. So most crops work for up and spoke, very unfortunately.
Thank you, Michael. Is there any responses from the panel to the previous question? No? Any comments? Okay. Hello.
Yeah, my question is to the bankers and maybe even Michael from his experience in other countries. How significant is the role of insurance in agribusiness funding for SMEs? Because I hear a lot of discussion around risk And we talk about banking the unbanked, how about, you know, insuring the uninsured? What's the role that insurance can play in enabling banks to comfortably lend to citizens?
Yeah, insurance hasn't come up yet. So. You would like to respond?
Okay, yes, I think the insurance, I don't want to respond, but I can respond from the demand side, I think. We tried and looked at some of these products in terms of how do we deal this process. And I think what has come, we already talking of high cost of funding. And the insurance doesn't count. So the moment you then try and push insurance, remember it's also eating into your bottom line. Yes, it will cover you in the event of this, but immediately as you start operating, it's eating you. I'm not saying they don't insure, but I'm only looking at the challenges. We try to do that for cattle, we try to do that for horticulture, and the response that was coming from the demand side was, we don't think we need this extra expense. I would rather face the risk and then deal with the risk when it happens. Instead of maybe paying now, when I pay, I'm not sure whether what the risk will happen, and then but I'm using now. I think it's really comes down to the cost of funding structure now. If we had a lower cost structure and also maybe the insurance priced reasonably, I must say not reasonably, I say reasonably. It should then, when you look at it, the reasonableness is you are supposed to look at the margin. And if I mean today, and everything else factor in the remaining 2 cents, then it doesn't make much business sense for me to go that. If I can save the extra 5 cents and add to my margin, I would rather do that, and then I will feel the risk when it happens. I think we've seen also a number of cars in town, third party insured, say, I would rather insure for that other person that I'm hitting, but for mine, I'll deal with it when it happens. So I think that's where we are coming up. I think it's really an issue of pricing, how we can look at it. And then the other part, which I I've yet, don't quote me, I'm yet from the demand side, is when the event happens and you have been losing and now you've lost and you want to get that coming. I think the challenges also trying to get either when you get it, it might not be a full compensation at the expected level. As I said, please don't quote me. I'm only saying what I was hearing, what I'm hearing from the demand side.
Also, maybe to add, I think from a product perspective, simple product perspective, I think the market is not yet fully developed. I think I'll point one of the risks that us vendors look at is the credit risk. And in the market to find an insurance product that covers you against the default it's very difficult to come across one in the market. But this is despite the cost aspect to find the right products that then also makes the banks comfortable and the financiers comfortable. I think there's one that needs to happen.
I can just add as well, from my experience, particularly in other countries, including the UK, insurance is one of the things nobody wants to pay for insurance, even in the UK. But I've worked in Zambia and Rwanda and other places, particularly for talking about low-income people. People are saying, so I pay you some money and I may not get anything for it. Particularly if it's life insurance, is one example. People are saying, why should I pay money for something that I don't get? My wife gets something after I die. So it's a hard thing to sell. So then what you end up, and just to go back to the FinScope thing, actually what we have been promoting as UK for many, many years, when we talk about access to finance, we actually mean access to a range of financial services that meet people's needs. So many years ago, there was microcredits and that kind of got a bad rep and things. But actually, what our sort of philosophy is, poor people need a range of financial services to meet their needs. That includes credit, that includes insurance, actually, that includes payment services, remittances, affordable ways to send money, transfer money, etc. So yes, it's a really important one, but there's a long way to go, I think, across many markets to help people kind of understand the product and the pricing and be willing to pay for it. What often then you see is bundling it in with other products, whether it's mobile phones or whether it's, here in every country, I think you're forced to pay for your third-party car insurance. That's one approach, as you mandate it. The other approach is bundling it in. So I buy a phone and actually bundled it into my monthly package for paying for my phone as an insurance product. I don't actually know how much I'm paying for the insurance, but I know that it's get a benefit. So that's typically the approach that I've seen the private sector take. But then you can get into concerns around financial consumer protection. Are you ripping people off? Are they aware? Are you actually charging them for a financial product they don't need? They're not aware of it. So there's other complications as well. So it's a tricky area to get right. Some good examples, though, at a different level that we as the UK also fund. You may have read recently in the press, so something called Africa Risk Capacity, which is sovereign level risk insurance for droughts and floods. So we and other governments, the German government, help fund premiums for sovereign drought insurance through ARC as a part of the African Union. That's just paid out for Zimbabwe, somewhere like $30 million. There's another facility called Start Fund, which is a community level, we call it disaster risk financing. So actually community level pre-positioning local NGOs and funding commitments from the Start Fund network that also pay out very rapidly in the case of a cyclone or drought or flood. So there are, Start Fund is a really good example of community level drought insurance. It's not quite probably what you're asking about, but I think there are some good examples out there. But again, I think the market for consumer insurance is challenging.
Okay, just one or two more questions as we need to wrap up.
Maybe if I can start with just full disclosure, I'm actually an imposter here. I'm not a banker. I'm not an SME or economist. I'm a pastor by trade, by calling, electrical engineer training, and a farmer by hobby. Now, riding on those, I was invited here by my good wife, who's into value addition for those people on that picture right there, looking to improve their livelihoods. But my pastoral heart for people had me start an organization that plants fruit trees in public places, in schools, in hospitals, and in rural communities as well as in urban ones. So unfortunately, my proof of concept, which was just along 2nd Street, just outside the British Embassy, actually of 160 fruit trees along that road had to be literally uprooted recently because of the roads we just did. But I'm glad I was dragged here kicking and screaming, because I can ask a couple of questions to you. One, mostly to you, Mike, but also to the bankers. As a non-voluntary organization, I obviously can't apply for loans. Is there scope for grants? And also, you mentioned an issue of technical support. How does somebody like me get access to that technical support in order to help those people? And perhaps the banker's script to that might be in line with the CSR mandates. Thank you. Oh, yes, Mama.
Sure, okay, I can answer. I mean, perhaps let's have a follow-up conversation with myself and my team about specific funding opportunities. As I sort of tried to explain, we typically do things through partners, so it might be we understand more about what your organisation is trying to do, your mission, and find out if there's a partner that we're already supporting that's best place to work with you. We don't often provide grants directly ourselves, particularly not small scale grants, but very happy to have a conversation about that.
Thank you. At the back, I think, Tony, whoever's got the mic, Kuda, if you've got it, then you should talk.
I think this is to the bankers, and also everyone around. I think we have been addressing the symptoms. We haven't dealt with the real issues. We cannot sustain Zimbabwe on resources that are coming from outside. The challenge I give to the bankers is, I think somebody raised it to say, okay, what is going to motivate people to sell? We are not seeing any savings, and this is why we are running into these problems. So
the bankers, what do you need to do to attract savings which are domestic, and with those domestic savings, they can be online with resources coming from outside just to complement. There is no way we will sustain ourselves on foreign resources to finance whatever we want. So to the bankers, the challenge is you need to start a discussion of creating a conducive savings environment. Trust in your banks, trust in the savings itself. It has to be driven by. That's the sort of challenge which I give to everyone here. That there is no way we are going to be relying on the British to give us money, the Americans to give us money to finance our domestic requirements. No ways. You talk of blueberries. How many people in Zimbabwe can do blueberries? Only a minister. So it doesn't take everyone. So we need a savings movement to mobilize domestic resources. That's my contribution.
Would anyone like to respond to that? Policy, I think.
Good challenge. I think for the formal sector, that's a policy environment issue. But I would agree with you, savings are critical and all economies to grow need domestic savings. I think at the micro level, village savings and loans, they have different names in different places, are a brilliant way of empowering local communities, particularly women, to start saving small amounts, but that can grow over time and empower them to make financial decisions themselves. And so there are projects like that do happen in Zimbabwe. We support some, I'm sure others do. So the micro level, but I agree, the formal savings system, there are, I mean, I'm an outsider, but I'm sure why people don't trust the banks. It's not necessarily the bank's fault why they don't trust the banks.
That's why I'm saying we are tinkering with these are the symptoms. We need to be discussing the real issues.
Thank you for that.
My contribution would be mainly to respond to a speaker who was asking why banks' knowledge is specific in terms of agriculture rather than in the past, and also the bank's allocation in terms of resources to smallholder farmers in agriculture. From my experience, I don't think that actually money follows surface, and money follows where the chain is. So to a great extent, I don't think that as a country we still have a production problem that is as big as the market problem. From my experience, the challenge that we are having in smallholder agriculture, it's a market problem, it's not a production problem. The biggest evidence is if you go to Mbari Cedar, there's always heaps and big heaps of something rotten. You eat cabbages, you eat tomatoes, you eat onions, something is rotten. And at the same time, if you look at the statistics at any particular time, data will show you that there will be tomatoes that are rotten in Mbari Cedar, but they will be in shortage in Wheatforce. So before we talk about exporting, we need to reconstruct the market for our crops. A case in evidence is if you look at the crops that are currently doing well in Zimbabwe, somebody spoke about tobacco. It's because the Chinese came and they buy everything that is in the market. That market for specifically tobacco was reconstructed, and everything that you produce in tobacco, you sell. If you look at grains, farmers complain about payment and late payments, but grains, they are purchased by Grain Marketing Board and generally, let me say government. Somehow they take grains. We eat more grains, also Delta takes more grains. So there's no problem with that. This is why most of the time we'll speak about horticulture. We end up speaking about horticulture, blueberries, and so forth. That market, I think I will not dwell on how that market was destroyed, everyone knows. So between 2002 to the time that we dollarized in Zimbabwe, the data shows that there was a breakdown of markets. marketing of these products. And when dollarization came, people started to concentrate on producing because there was now the US dollar. Partnerships came. I'm glad to say I participated in part of the partnerships, some in this room and some not. But data shows that partnerships actually increase the cost of the funds. To an extent, probably some of the cost was not extended to the farmers, but in real terms, the partnerships, except those that came as grants from NGOs, any other partnerships that came, yes, they came in good faith, but they increased the cost of funds. So, in closing, I think my view is, if we would concentrate on creating the markets first, money will follow. I can assure you that as long as the markets are there, because also the data that is in this country shows that if it's been 2 banks, it shows that most of the failing in terms of NPLs of smallholder farmers and small commercial farmers, they fail at the point after production. They fail because either their expectations of returns or what they're supposed to sell is less than what they were supposed to get, or somehow they fail to market their products. So at this point, production is now less of a problem than marketing is. Thank you.
Okay, thank you for the contribution. Okay, I think we better wrap up. We need to get home, I'm sure. So it's just a huge thank you to our panel. It's been really good getting to know you all. And thank you to you guys for hanging in a bit long. And we hope to see you next month. Thank you.